Welcome to my channel. This is Chapter 2, the recording process. This is the first part of your handout: account, debit, and credit. So from the beginning, we go to the account. An account is an individual accounting record of increase and decrease in a specific asset, liability, or equity item. An account consists of three parts: a title, a left or debit side, and the third one is a right or a credit side. Because the format of an account resembles a T, so we refer as a T account. The term is debit indicated at the left side. The term of debit indicates the left side of an account, and credit indicates the right side. So we use the term debit and credit in recording process to describe where entries are made in account. For example, the act of entering an amount on the left side of an account we call debiting, and on the right side we call crediting to the account. When comparing to total of two sides, an account shows a debit balance if the total of the debit amount exceeds the credit. An account shows a credit balance if the credit amount exceeds the debit. So basically we can remember that the left side is debiting and the right side is crediting. So why do we use a specific account? As you know, this spreadsheet create based on accounting equation in Chapter 1 is used not only to record the transaction, but it also determines the balance of each item by adding up all amount recorded in every column. If there are 100 transactions involved, missing plus and minus in one column would provide an ample opportunity to make a mistake, and it's be difficult to track multiple items. So how can we solve it? We use an accounting expense equation to include the specific account under the heading of assets, liability, and equity. To tracking multiple accounts become easier when it's a separate column, and we will totaling each column, then we're computing the difference between the column to our right at an ending. And the second one is the credit and debit rule. Always remember this when you journalize an entry. Each transaction must affect two or more accounts to keep the basic accounting equation in balance. We call that dual effect. In other words, each transaction, debit and credit, must be equal. And the equality of debit and credit provides the basis of the double entry system of recording transaction. And under this double entry system, the dual effect, or you can say is two-side effect of each transaction, is recorded in appropriate account. If every transaction is recorded with equal debit and credit, the sum of all debit to the account must equal to the sum of all credit. If it's not balanced, not equal, then you must double check. Maybe there was something wrong.